What do you talk about compliance? The tax ID, the way it has been structured, we have a lot of problems to deal with because it's not addressing the issues we have practically on ground that we've seen so far. We all agree that we're using NIN, RC to register both non-individuals and limited liability companies, and you give them what you call tax ID. Now, how do you deal with an organization that is resident in Lagos and has taxpayers scattered across Lagos and Kano, for instance? How do you differentiate the resident of Kano from the list of the tax ID you've issued? You cannot. From what we've said, you cannot. You have to keep on going to the premises of the company, trying to differentiate who is resident in Lagos and who is resident in Kano. For me, the approach to implementing tax ID in Nigeria will have to take the theory of BVN and account number.
We are staying with the story of the 28th Annual Tax Conference of the Chartered Institute of Taxation of Nigeria, held from Monday, May 11th to Friday, May 15th, 2026, with the theme, Tax Reforms and Global Relevance, Positioning Nigeria's Tax System for a Sustainable Future. In the first installment, we brought you excerpts from the four-day event, featuring the lead paper delivered by the Honorable Minister of Finance and Coordinating Minister of the Economy, Mr. Taiwo Oyedele, and what transpired at the opening ceremony. Today, we'll be sharing with you the plenary session 2 with the topic, From Blueprint to Reality, evaluating the early outcomes of Nigeria's 2025 tax reforms. This was delivered by the Power Minister Designate and the Chairman of the National Tax Policy Implementation Committee, Mr. Joseph Tebe, who was ably represented by Mr. Ajibola Olamola, Senior Partner at KPMG. The session was moderated by Celestina Nwabreze, Managing Associate, Olaniwun Ajayi LP, and was discussed by seasoned panelists.
Evaluating the early outcome of Nigerians' 2025 tax reform. This, we have paper presenters and the panelists that will be speaking to that particular topic.
So, in relation to what we are going to be discussing today, you will recall that during the minister's speech, a question was raised with respect to the early implementation outcome. Indeed, that question is part of the deliberations that this particular panelist is going to be exploring. So, as we all know, every ambitious fiscal reform follows a familiar arc. So, it begins with the political will to stakeholder engagement, legislative debates, and then culminates in that very moment when the underlying piece of legislation is eventually passed into law. Now, what comes after that is where the real test begins. The transition from the blueprint to reality, from policy to implementation outcome, from what the law says it will do to what the law is actually doing. And this is precisely where Nigeria stands today when you talk about the Nigerian 2025 tax reform. Globally, the credibility of a major reform is not only tested by reference to the elegance of the blueprints or the legislative intent. So it goes beyond that. It is actually tested by reference to the ability of the underlying institutions to translate that piece of legislation into a measurable outcome, whether by reference to effective administration, stakeholder confidence, policy coordination, or institutional responsiveness. As it relates to the Nigerian tax reform, it is indeed no doubt that this remains one of the formidable overhaul to the fiscal architecture that we have in Nigeria today. And apparently, as implementation unfolds, pertinent questions have been raised, and we actually noticed that today, that was part of the very first question that was raised during the conversation earlier today. And those questions pertain to how the institutions are responding, how are taxpayers navigating the reform, how are they adapting to the reform. Do we have the necessary infrastructure to translate the legislative intent into a measurable outcome? These questions and very more are the things that the panelists will be discussing today. As we all know, this discussion is very important when you look at it from the lens of the broader physical modernization that is happening across the other parts of the African countries. And given the scale of the economy, it is without doubt that the Nigerian reform experience is one that the continent is closely monitoring. So it is indeed at this junction and with utmost pleasure and anticipation that we would invite the lead presenter to take us into this journey of the implementation experience, emerging realities, and the strategic outlook for the Nigerian tax reform.
Mr. Ajibola Olamola started with a brief background of the National Tax Policy Implementation Committee.
The NTPIC was inaugurated in the last quarter of year 2025, following the enactment of the principal tax reform legislation. The committee was established to coordinate the phased implementation of the Nigeria Tax Act, the Nigeria Tax Administration Act, the Nigeria Revenue Service Act, and the Joint Revenue Board Act, while ensuring a smooth transition into the new fiscal regime. The establishment of the NTPIC also reflected the federal government's intention to adopt a more collaborative and technically coordinated approach to reform implementation. The committee was designed to serve as a central implementation and coordination platform involving key stakeholders from federal and subnational revenue authorities, fiscal policy makers, regulatory institutions, private sector representatives, and technical experts. In terms of our mandate, the NTPIC was entrusted with a broad implementation mandate aimed at ensuring the effective operationalization of the 2025 tax reforms. Its principal responsibilities include overseeing the implementation of the tax reform laws and associated fiscal policies, coordinating stakeholder engagement and intergovernment collaboration, facilitating taxpayer education and public sensitization initiatives, identifying and addressing emerging implementation concerns and operational bottlenecks. There is now time enough, since these reform laws were passed, to begin to evaluate the early outcomes of the 2025 tax reforms. Even though these tax reforms remain at very early stages. For example, the first corporate tax returns will be filed starting from around May, June of 2025. So, the cows will still be coming home as we speak, so to speak. But we have already gone through a filing season, for example, for personal income tax from March 30th of this year. So there's enough time, enough has happened for us to start talking about what the early results have been.
What are the significant outcomes of the 2025 tax reforms?
Following the enactment of the tax laws, several subsidiary regulations, administrative directives, implementation guidelines, and operational frameworks have been developed, both at the federal and subnational levels, to guide and facilitate the effective implementation of the new tax laws. A number are still imminently to be issued. But at the very least, we all recall that a significant regulation on presumptive tax was recently signed by the former Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun. What a lot of people do not know is the seismic change that that effort itself represents, because it took collaboration through the mechanism of the Joint Revenue Board, the JRB, with all the state governments and the fiscal authorities at the state level to agree to the framework that is enshrined in the presumptive tax regulations. That in itself is a first of its kind. And it's an indication, very early indication, of the kind of collaboration we hope to see between the federal fiscal authorities and the subnationals in order to move tax reform forward. These implementation instruments are critical to the operational success of the reforms because they provide legal certainty and interpretative guidance, implementation clarity for taxpayers and revenue authorities, consistency in administrative practices across jurisdiction, procedural frameworks for compliance and enforcement, and a clearer understanding of taxpayer rights and obligations under the new regime. Another very significant consequence and outcome of the 2025 tax reforms has been the introduction of Rev 360, which is a modern tax administration program designed by the Nigeria Revenue Service to support the implementation of the new tax regime and strengthen Nigeria's fiscal administration architecture. This platform has been developed to replace Promax and improve taxpayer registration, simplify tax compliance filings and other compliance procedures, integrate taxpayer databases, automate compliance monitoring, and data-driven enforcement mechanisms, which enables the NRS to enhance transparency and efficiency. Rev 360 is a necessary consequence of the tax reform. It is the next evolution of the digital tax administration that has been introduced by the Nigeria Revenue Service to make tax compliance less burdensome on taxpayers. I move on to the next one. In terms of the mandate of the committee to engage in stakeholder engagement and taxpayer education, one of the most notable features of the implementation process has been the sustained emphasis on stakeholder engagement and taxpayer education, consultative policy implementation. Since the enactment of the tax laws, the NTPIC and relevant revenue authorities have continued extensive consultations with taxpayers and fiscal advisors, businesses and organized private sector groups, state revenue services, professional and regulatory bodies, domestic and foreign investors. Beyond improving taxpayer awareness and clarifying compliance obligations, these engagements have also served as important platforms for receiving concerns, objections, and recommendations regarding aspects of the reform that may inadvertently adversely affect taxpayers, specific industries, investment activities, or the broader economy. Through technical consultations, policy dialogues, and stakeholder feedback sessions, implementation authorities have been able to identify practical challenges, address misconceptions, evaluate potential economic implications, and consider mitigation strategies aimed at ensuring smoother implementation and more balanced fiscal outcomes. The process is not at an end, and we invite more correspondence and engagement from the public with the NTPIC. One of the most widely discussed outcomes of the 2025 tax reforms had been the reduction in the personal income tax burden, or at least the promise of a reduction in the personal income tax burden on low and middle income earners. The public feedback, particularly on social media, has been very vicious, with the public expressing distrust in those outcomes. But as you would have noticed, following March 30, there has been a diminution in white noise on social media. I mean, I'm not saying that it will continue, but at least the early indicators is that most of the concerns that have been expressed by users of social media were largely found to be non-existent. In fact, in some of the work we have done, we have seen that for income earners, I know Senator Adams Oshomole was saying that he would like to tax people earning at 30 million and above, he would like to tax them a bit higher. But actually what we've seen is that for taxpayers earning 50 million and below, you would have noticed a sharp decline in your effective tax burden. That is as a result of the 2025 tax legislation. There's more income, disposable income, that's been given to every tax-paying Nigerian. Of course, for taxpayers in the 50 million and above band, those ones don't typically use social media, so we're not likely to hear them complain, but their tax burden has gone up. So Nigeria is essentially taxing the rich more and giving relief to the poor. Based on stakeholder feedback across various quarters, it is increasingly evident that the reforms are beginning to achieve their intended objective of increasing the take-home pay for this category of earners, which are the low and medium income earners. Even the early rich earners will also benefit from it. Early indications suggest improved disposable income levels, particularly amongst employees within the lower and mid-tier income brackets, consistent with the design of the revised tax structure. We expect more robust empirical validation data to emerge in the coming months. Data from the State Internal Revenue Services will be particularly useful in substantiating these early observations and providing a clearer, evidence-based assessment of the reform's impact across income groups. The next early outcome, which is the last one I'll probably emphasize, is that of the Office of the Tax Ombudsman. The Tax Ombudsman is a very new introduction into the Nigerian fiscal landscape, a key institutional innovation introduced by the 2025 tax reform. It is part of a broader reform objective aimed at strengthening transparency, accountability, and public trust in Nigeria's tax administration system. It is expected that the Tax Ombudsman will become a critical pillar within Nigeria's tax ecosystem and provide taxpayers and users of the laws with another avenue for dispute resolution without necessarily going into adversarial dispute resolution. In conclusion, Nigeria's 2025 tax reforms represents one of the most ambitious fiscal transformation initiatives in the country's modern history. The reforms signify a decisive shift from a fragmented and administratively burdensome tax structure towards a more coordinated, transparent, technology-driven, and globally aligned fiscal system. Importantly, the reforms did not emerge from a fundamentally defective tax regime, nor do they invalidate the substantial progress achieved through earlier reform efforts. Rather, they consolidate decades of policy development, legislative refinement, institutional reforms, and stakeholder-driven fiscal initiatives. Ultimately, the long-term success and sustainability of the 2025 tax reforms will depend on critical factors such as sustained political commitment, effective institutional coordination, administrative transparency, stakeholder confidence, and continuous investment in digital infrastructure and taxpayer education.
Having presented the early outcomes of the Nigeria's 2025 tax reforms, it was then the turn of the distinguished panelists to discuss.
Thank you for that insightful presentation. You've indeed taken us through the architecture of the reform and then the realities of its implementation. And for me, this indeed serves as a strong foundation for part of the discussions that we are going to be having here today. For me, the takeaway is that whilst we don't have the empirical data to validate some of the feedback that we receive from the stakeholders, we have people from the subnational currently sitting with us, and they are the representative of the people, and they will be speaking from their experience, what they've observed on ground. So my question first is to Dr. Abubakar. So, sir, what implementation realities are beginning to unfold at the subnational level, and what does this tell us with respect to the long-term prospects of the reform?
Well, the earlier results have been a bit mixed. Taken from January to, let's say, last month, April, while there is a significant reduction in tax payout per head, as evidenced or adduced by the paper presenter, because there are a lot of concessions and savings on the tax payments by taxpayers. What we've seen from January to date is that for you to cover the gaps of what has been saved per head, you need to do more registration. So what the reforms are actually reinforcing now is to address the basis of tax administration. And these bases are two, if you allow me. Taxpayer registration is very key. And what I mean by taxpayer registration, you need to enumerate and identify the people that are going to pay the taxes. Without identification enumeration, which culminates into registration, the amount of taxes you expect to collect can never happen. So the reforms are actually reinforcing the need for revenue authorities across subnationals, including the federal level, to, expand what we call the tax net or the tax base generally by doing proper registration. And we're able to achieve that with the new provisions we have in the tax law that talks about tax ID. The new tax ID now is NIN based, also RC based for companies. But we still have challenges because the major challenge we see today, even with the tax ID, which is not properly defined by the law, what we have is by regulation that NIN is going to be used by individuals and RC for companies. What happens for MDAs of government? There isn't any definition of what the tax ID can be, because we also rely on some of these MDAs to remit taxes on behalf of their employees. So how do we register them? The tax ID hasn't been defined. We only rely on the NIN and the tax IDs we generate using, while tax payout per head has, reduced. But we realize that the effort we put in place even before the implementation commences in terms of registration has actually covered that gap. So it's a mixed stuff. So comparing some of the subnationals, speaking from Kano experience, for instance, when we compare quarter-on-quarter collections, first quarter of 2026 against the first quarter of 2025, we've seen a significant improvement, even though it's not that significant, even though the a priori assumption was that collections are going to dip. That was the prior assumption, that collection will go down first quarter of 2026 up to maybe the last quarter of 2026. But to our surprise, there is a bit increase in the quantum of money coming in. I was also discussing, I think 2 months ago, with the EC of Lagos, Mr. Ayodele. He was also surprised that the quantum of money coming in is also increasing. I think according to his narration, last month or 2 months ago happens to be the highest ever collection in the history of LIRS. But when you compare that across other subnationals, I've given you the kind of experience and also possibly the discussion I had with Lagos, his own experience also. Other subnationals that I want to mention names, maybe on this platform, have seen a dip in their collections. So the bottom line is that it's a mixed reality coming out to address the basis of tax administration. And for me, the basis going forward is taxpayer registration and then secondly filing. Now, when you come to filing, for instance, the new reform is actually trying to impose a kind of paradigm shift that is very significant. At subnational levels, we are trying to deal with tax administration 2.0. The new reform is trying to impose tax administration 3.0. Some people are even grappling to have the basic ITAS or the e-tax platforms, while the new reform is asking for AI-integrated platforms and stuff like that. So there is a serious challenge that is being imposed on the subnational level, especially for states that have been grappling with possibly IT and related stuff. Then we also have issues with stakeholders' engagement. The new reform is now reinforcing the need for subnationals to do a lot of stakeholders' engagement. Taxpayers are aloof as to what is happening with the new reform. We receive a lot of calls. That, pushed us to implement what we call the call center in Kano, for instance, because the number of calls we receive do not commensurate with the kind of effort we are putting in place. So therefore, we had to come up with a digital way of addressing some of these challenges. We had to set up a call center that runs 24 hours. People will call with a dedicated number and also automated the kind of responses we give to the taxpayer. That is a new challenge on the part of the subnationals.
So we'll move to Ogun State. And my question is to the IRS chairman, sir. So are the reforms, still on the implementation outcome, so are the reforms beginning to influence investors' confidence, economic planning, and fiscal sustainability within the state?
At the risk of repeating a lot of things that Dr. Zaid mentioned, I think that it's a bit too early to call in terms of the impact or what you can see as the effect of the tax reforms at the subnationals. Because there are so many things that are changing, so many dynamics are coming in onto the people all of a sudden. Even when you talk about even the registration is very key, no doubt about that. A lot of the internal revenue services at the subnationals, they are still grappling with their digitalization process. And some that have even done their digitalization process, they've not really looked at a lot of things in a more global or broad way against what the new tax reform is throwing at us. If anybody is telling you about registration, all you hear is, oh, for companies, RCs, for individuals, NIN. But it is more complicated. It's not as simple as that. Beyond companies, you have to do the registration of the CDAs, for example, that will get their registration through the Ministry of Community Affairs and whatever. You have the incorporated trustees, okay, all these churches, mosques, and whatever. These are things that you need to set up within your registration process. These are challenges. These are things that will affect, the global process in terms of what operates in the state or at the subnational level. So that registration is very key, no doubt. As regards how it's affecting the fiscal framework of the state and in terms of the way things are working, I will really, what I have seen really is we haven't seen so much increase the way we expect. In terms of the way we conceptualized it, we thought we're going to see a kind of a sharp, dip in terms of the kind of revenue that we generate. And then gradually, as people come to terms or understand what we are talking about, then this will start rising. Why would the revenue dip in terms of revenue generation? You have taken a number of people out of the tax bracket, okay? Maybe, probably most of the civil servants. If particularly states that are civil service based only, you can imagine maybe almost all the civil servants will not be paying taxes, and you can imagine the revenue really dipping. It's going to have impact on the economic framework of the state. And what we see is that as you start bringing in the real, catchment area, if I can use that word, the high net worth individuals, these are the people that you are trying to really bring in terms of they now paying their taxes adequately, in terms of engagement with them to let them know that you are not against their operations. You are just trying to see how you can act more in a more tax advisory manner. What we have done in Ogun State is we have met with a couple of associations. We are still going to meet with some. We've been going around. What we are trying to preach to them is that we are your advisors. We are your friends. What we are trying to say is those that are earning well, let them pay well. Those that are not earning as much, let them pay nothing or little. So the focus is on this tax reform is aimed at helping the low-income earners have more income at their more disposable income to really manage their lives. And that's what we have been preaching, and it's been really helping to a large extent. So I still see a lot of things that we need to do in that space. And again, the other thing that we also need to really mention here is the fact that the high net worth individuals that are the catchment areas for the subnationals, the challenge is, are we really ready in terms of the political will? Is very key. That political will is very, very serious. Beyond the autonomy that is given to the subnationals and internal revenue authorities. Some are real autonomy being used. Some are mortgaged autonomy, if I can use that word. Whatever it is, but even if you are fully autonomous, when it comes to certain things about political will, you need to, what I will use the word, borrow yourself some sense. You need to really apply wisdom when you are dealing with a lot of this HNI. And these are things that will really affect the economic framework at the subnationals.
Now let's move to Zamfara State. So, we've heard a lot of things with respect to the early implementation and the positive outcome that we've seen so far, even though there is no valid data as we speak to collaborate some of those things. So I want to look at it from the perspective of the institutional capacity and administrative readiness. Do you think these tools are important for the success of this reform, ma'am?
My previous colleagues have said, the early success of these reforms cannot be easily seen very visible now. However, to an extent, we have to start looking at what was really the intent of the reforms. The intent of the reforms was to look at multiple taxation, that is to reduce the number of taxes that were formerly implemented by the state and the internal revenues, and also to ensure that there is digitization. So that is where capacity building comes into place. I can tell you that for the State Internal Revenue Service, or for Zamfara State Internal Revenue Service, we are partially ready since we had already implemented a central billing system. But by the time we came back and looked at it, we realized that we didn't have an assessment module for the central billing system that will help us bring in taxpayers as well. So we had to now come back and add a module that will assist in assessment of taxpayers properly, not just billing taxpayers. In terms, again, of, because there is harmonization of taxes, and you have to harmonize taxes between the local and the state, local government and state revenue authorities. You know that at the local government level, digitization and technology is not really there. So in terms of that aspect, we had to take, after we had sit down, done our harmonization with the local governments and have agreed, even though there were challenges here and there, the implementation of the new reform became so difficult for us. Why? Because there were no digitized systems for the local government. We had to now come back, okay, create modules that will assist us, help collect for the local government revenue authorities. So as it is now, we are still grappling with the issues of capacity, because those are things that we will have to develop over time. And it's not like it's something that we will visibly see very soon, but we are hoping that as time goes on, with sustained coordination between the local government, the state internal revenue, and even the federal authority, we will be able to overcome that issue of capacity building. And I know that aside that, we were able to, I actually was able to try to get support from the Nigerian Revenue Authority in terms of capacity building, where we could get people that are very specialized, that have the capability to now come into the internal revenue and see how we can improve upon those activities that will aid towards more revenue generation. Thank you.
Now let's move back to Kanu. So, sir, are taxpayers beginning to respond positively when you talk about compliance, embracing technology, and indeed the administrative coordination that this reform anticipates?
Before I get into answering that, let me also talk a bit about the earlier contribution made by my brother here and what I said about registration. I also want to use this opportunity to possibly advise the paper presenter as part of feedback of what we've seen practically from the field. You know, tax administration begins with registration of taxpayers. I still want to overemphasize this. Registration, filing, and assessment, as she has mentioned. What do you talk about compliance that you mentioned? The tax ID, the way it has been structured, we have a lot of problems to deal with, because it's not addressing the issues we have practically on ground that we've seen so far. We all agree that we're using NIN, RC to register both non-individuals and limited liability companies, and you give them what you call tax ID. Now, how do you deal with an organization that is resident in Lagos and has taxpayers scattered across Lagos and Kano, for instance? How do you differentiate the resident of Kano from the list of the tax ID you've issued? You cannot. From what we've said, you cannot. You have to keep on going to the premises of the company, trying to differentiate who is resident in Lagos and who is resident in Kano. For me, the approach to implementing tax ID in Nigeria will have to take the theory of BVN and account number. BVN is a universal number given to all, account holders in Nigeria. But attached to that BVN, you have account numbers that are bank specific. When you have the BVN, you have account number that is bank specific. For instance, if you bank with GT Bank, the moment you look at the number, you know this is GT Bank, and you know the location with the sort code. We have not done that for taxpayers. How do I now know a taxpayer through his ID is resident in Kano, or is resident in Kaduna, or is resident in Lagos? We don't differentiate. We don't even, differentiate where the taxpayer is resident. What we've done is not just to give a straight jacket numbers to all our taxpayers. Remember, at the subnationals, we pay taxes by residence. So we have to begin to take the approach of BVN and account number theory for us to get it right. I'll give you an example of what we've done in Kano maybe in the last 2 months. We have employers of labor that are in Lagos, and they have their staff in Kano. They end up paying all their taxes in Lagos. I have to send staff to go to Lagos, begin to do all the segregation. And so we need to address this in terms of compliance. Otherwise, the compliance will also be mixed. A lot of states will be losing out. I have similar experience with Abuja, for instance. The head office is here in Abuja. They have their employees in Kano. They end up paying all the taxes to Abuja because they cannot differentiate, even using the tax ID, where you are resident. So that approach of BVN and account number need to be looked at, to see whether we can address it. Now, when it comes to digitalization, earlier I mentioned the tax administration 2.0, 3.0. For the sophisticated taxpayers now, they are asking for a few clicks for them to do their filing. Now, we have to set up a mobile offices or mobile centers where, the staff will have to get into the premises of these, taxpayers to teach them how to do even the filing. In December or January this year, we have filers done by employers of labor, which is generic for 2025. But the requirement of the new reform is that every employee within the employer's, premises, within the taxpayer's premises, must also do individual filing, which was not in the defunct legislation that we have. Even if we had it then, it wasn't well implemented. Now the requirement is that every employee must also do filing. So we have a lot of correspondences, especially from the financial industry, at how they are going to go about it. We have to set up a team going bank by bank to coordinate the bank branches. You have to first coordinate the bank branches. For instance, in Kano, you have more than 10 branches of First Bank. Are you expecting First Bank to be filing per branch, or you want them to coordinate or to pay through the regional office? We have to do that, not only for financial institutions, for all taxpayers that have branches across the state. So when it comes to compliance, you need to address a lot of IT issues. You need to also address a lot of process issues. I've highlighted the issues of the tax ID, which is the beginning of the entire process. Once you compromise on the registration, forget about any collection that you are going to have at the end of the day. Your filing is going to be compromised because the entire premise of this reform is on the maturity of what we call digital public infrastructure. Once your IT system is compromised, you are going back to the brick and mortar days of doing filing, which is not acceptable at this current state and time of the reform. So we have a lot. And 2026 will only be declaring year for this reform to take effect. It's not even foundation level. We have to clear the site. We're only trying to clear the site before we get into the foundation level. We are going to see a lot of maybe averaging of figures around June, July of this year, especially at the subnational level. At the federal level, June, July will be the boom period for the federal government because that is where most of the filing by corporate organizations will be done. But I believe around June, July, August, we'll see some decline.
This is quite thought-provoking. So I just want to pick up on the last thing that you said with respect to, not even the last thing, the tax ID issues that you mentioned. So in your view, how do you think we should address this? Do you think we should go back to VVN or we should go back to CITN? So what exactly would be your recommendation? Or do you think it's something that can be addressed under subsidiary instruments?
No, I think it's implementation issue. I've addressed it partially, that we need to take the theory of BVN and account numbers of banks. for you to be able to identify. Now, to also address the issues of maybe the MDEs and NGOs that I've mentioned, I think we need to come up with a national template of how you identify, MDAs of government. Assuming, for instance, if you have Ministry of Budget and Planning, we all have Ministries of Budget and Planning in Nigeria. So what number, what code can you use to identify Ministry of Budget and Planning across the country? And how do you designate that this Ministry of Budget and Planning Kano is different from Ministry of Budget and Planning, maybe Lagos or Rivers? A lot of work needs to go into that. I have partially addressed the requirement. Maybe if you need the total answer, he has to consult me.
Unfortunately, this is one that will likely require a law change because the law correctly recognizes the tax ID as the instrument for tax registration. So, but it's actually a good recommendation. It's something that can be definitely looked into because we are now having a test situation, a test case for the law. And the intention is that at the end of the day, people on field implementing the law on the day-to-day will be able to provide recommendation with respect to their challenges that they've encountered as it relates to the black letters of the law. So let's move back to Ogun State, sir. So we've been talking about the implementation outcome for a while, but I think it's also important that we look at the economic objectives of the state and how this tax reform, perhaps from your perspective, aligns with the state's economic objectives.
Before I answer that question, I would like to maybe go back to the presentation by the paper presenter. I don't want us to put all this discussion on the subnationals. I believe the theme of what we are discussing about is from blueprint to reality and evaluating the early implementations of early signs of what we are seeing. Beyond the subnationals, we are talking of residency, payee, and all those stuff. There are other bigger issues in the tax reforms, okay, in terms of other challenges that a lot of tax consultants are having vis-a-vis this reform. But the key thing we need to understand is, in this reform we are talking about, the bedrock, the foundation is digitalization. Whether you are talking of NIN, going to BVN, I don't want to go into contentious issues. You see, computerization is garbage in, garbage out. So is your digitalization. Now, digitalization that we're talking about now is when you are putting your process together, like my sister said, like he said as well, different subnationals are at different levels in terms of the sophistication of their digitalization process. And when you are having all what you are doing now, being driven strictly on digitalization, no more cash collection and whatever, then you need to ensure that you have the robust system to really help you to really maximize the gains from the process. For example, I've had a lot of discussions with a lot of consultants. Many of them are having challenges with Rev 360. Okay? Some telling me that they want to pay $3 million. They went to FRS. FRS is telling them this story, that story. But the question is, you want money, but you have not actually prepared yourself in terms of that digitalization you are talking about. So sometimes we need to look at focusing on the results. Sometimes, if you need to do some parallel run in this period of transition, the key thing is ensure there is no leakage. There is completeness of the population or the revenue that you want to get. As regards to Ogun State economy, there's no doubt about the fact that that is the industrial capital of Nigeria. And we are very well aware of that. Because we are the ones that have all of the industries that you're talking about in the country, largely. Almost all of them are dead. Maybe whether they're manufacturing or whatever. So we identify that this is a big opportunity for us to grow. There's nowhere you go in Ogun State that are not going to be seeing so many new companies coming up. We have created opportunities for ease of doing business. Our focus is a step in the door. We have created opportunities for businesses to come in, making sure that if you want to get your CFO, you are getting a lot of all these things within a reasonable time frame, not when people go as far back as 3 months, 4 months, within maybe 1 week or thereabout because of other areas that are involved in. But for the Internal Revenue Service in Ogun State, the time frame for delivery of any of our product is 72 hours. So this is part of but there could be some legacy things that are being done, and they know anything that is going beyond 48 hours, it should be escalated to me, so that I'll be able to really look at, are there things that I could undo either by way of waiver or kind of management decision. What we are just trying to do is bring people in. That is what we want to do to help economy. We've seen a lot of opportunities in the new tax reform. We've seen a lot of opportunities in getting the HNI in. We've seen a lot of opportunities in growing businesses. Telling the new companies, look, if your turnover is less than 100 million, you have this waiver. If you are Greek, you have this, you have that. At the same time, as the businesses are coming in, of course, they are employing staff. As they are employing staff, it's driving our own economic base in terms of our IGR. So these are the things that we are looking more closely into. And with that, we go all out to see that we have a lot of stakeholder engagement. Even, it doesn't have to be the chairman. A lot of the directors are invited to various conferences, symposium. They try to really let people know that we are your friends, okay? And that way, we also try to let them know what we have in terms of our tax processes, the digitalization that we have. It is an end-to-end process, and we are trying to encourage people that you can do whatever you want to do from the comfort of your homes. Be that as it may, there will be some people, maybe because of education, that don't really know so much about that. We still try from time to time to see that we do some kind of jingles on the radio, on the television. If every day we are on media. So these are things that we need to do. And even at that, it is still not enough. I get the message every day, we are not seeing you. So we want to go up there, create a lot of billboards, so everywhere you go. Yes, you may spend money on that at this point in time, but what you are going to gain in the long run is bigger than the money you are going to really spend now. So we need to really make noise about the new tax reform. But the emphasis that I really want to keep on saying to people is, this tax reform is to help the low-income earners have more disposable incomes so that the life of Nigerians can be better. And that is the focus for us in Ogun State.
Indeed, we cannot overemphasize the importance of stakeholder engagement and awareness when it comes to tax administration in Nigeria. Now, let's move to Zamfara State. So beyond the recommendations that has been given already with respect to how to strengthen the ongoing implementation, so from a compliance perspective and institutional trust, as well as sustainability of the reform, what additional recommendations would you profile?
I think political will of the government is very important here for us to sustain this current tax reforms. Because again, we look at the social contract between the government and the people. If there is enough transparency, you find people paying their taxes. So what we need is continued creation of awareness of the new tax reforms, the importance of the tax reforms to individuals. I will not say that the tax reforms is mainly to help the low-income earners alone. I think in the long run, it will help in boosting the revenue generation of states as well. Because when there is clarity by the taxpayers and they have that conviction that their monies are properly utilized, you will see more compliance from people. And again, when there is this simplicity, which we're trying to aim at, removing the multiplicity of taxes, harmonizing taxes between the local government and the state government, where you see a taxpayer paying one single tax instead of paying different sort of tax like what we have done in the state, and also domestication of this levies and taxes that has been done by various states, where we have taxes that are simplified for the taxpayers. In the long run, you see people paying what they are supposed to pay, and that will lead to improved revenue generation as states. So what I will advise here is sustained coordination between the state, the federal, and the local governments will help in ensuring that these reforms meet their ends. And also, from the angle of high net worth individuals, again, the use of data from the federal revenue authorities, intelligence data will equally assist us in improving our assessment of high net worth individuals. which recently, or even in the current tax administration, the Nigerian Tax Administration Act, there are provisions that allow states to follow up on to follow up with the federal authorities to gain intelligence data that will help in improving the revenue of the state. You have agreements there, and they assist you in ensuring that they follow up with high net worth individuals that have income abroad where you cannot possibly be able to get this data, and that will assist in improving the revenue generation of the state.
Unfortunately, we are pressed for time, but I believe that we've covered significant ground. We've looked at the architecture of the reform to the realities on ground. We've also examined the institutional capability or capacity, as well as how taxpayers are responding to the reform. We've looked at the federal ambition against the subnational delivery. There has been recommendation across the table in terms of what we feel can be taken on board when we do the subsidiary instruments, and indeed things that can weave into the eventual amendments that may be done along the lines. Now, what is evident from everything that has been said so far is that the early signals are encouraging, although it is uneven. We still have mixed reactions from some other states, and we believe that the recommendation that has been profiled would be instrumental in shaping the reform. At this junction, we will leave it open to the floor and entertain questions.
Participants took turns to ask important questions, and answers were provided.
My question falls under three categories, and they're very brief. First one is this issue of tax reforms. I think there is need to look at the effects on retirees. The tax reform, well, is robust, but the effect on retirees, I think, is not being looked into. There's nothing in that tax reform that says anything about retirees. Why a retiree that is earning pension of 110,000 a month is going to buy fuel, is going to eat, is going to do medical, and then you will still do 3 or 4 times tax on that person, and there's nothing like medical care, of all those things for retirees. Okay. Retirees have already been charged, I hope you know, taxed during their time of work. Now they have retired, and you still want to be doing tax.
My question is for the Tax Implementation Committee. I want to know why we are yet to have implementation guideline for the new tax reform.
Okay.
Because the 2025 financial account will be administered with the new tax law. And there are some issues there that will affect the way we prepare accounts in 2025.
Finally, permit me to recognize the online participant. Please, technical, can you unmute Dr. Godson Iro to ask his question?
My question is, what is being done pragmatically by those charged with governance to ensure that tax practitioners as trusted advisors are always brought into the loop whenever strategic decisions regarding tax in our country, tax administration in our country is being taken to strengthen the tripartite relationship between tax administrators, taxpayers, and tax consultants.
Okay, the first question is with respect to the effect of the tax reform on retirees. And before I hand over to my distinguished panelists, I would like to dimension the question into 2. So I guess the question is, retirees engaged in trade or business, or retirees receiving money from the pension fund? So I will hand over to Dr. Abubakar to respond to that.
Well, thank you so much for that question. One, the tax laws are not individual specific. We are following the money. So even if you are a retiree and you have income, that income possibly can come from trade or business you do. You have to pay your taxes. But you also have to consider the fact that pensions are exempted when we are computing our personal income taxes. So the answer is very straightforward in the law. Pensions are exempted from tax payment, and you are a retiree and you have income from other businesses, you have to pay your taxes. It's a very straightforward answer.
Now, the other question is with respect to the tax practitioners. So the question that was raised by the person that participated virtually was with respect to how do we inculcate that collaboration efforts by ensuring that the tax practitioners are involved from the outset whenever we are deliberating on policy reforms, and even as it relates to administration. Ma, I will hand over to you to respond to that.
I think this was greatly achieved during the implementation, or not even the implementation, during putting the tax reforms together. Practitioners were invited and these laws were put together with the practitioners involved in that. And again, I know that there was an initiative to get practitioners, even CITN was involved, where we do trainings on the implementation of the tax reform. So that shows that practitioners were carried along from beginning even to the end of the formation of the tax laws and even at the implementation stage. Then again, I know that again, practitioners are currently being reviewed for, if you are going to be a consultant, you must pass some certain tests before you even become that consultant to be doing those activities of consultancy, such that you will not be doing those activities that are outside the line, helping taxpayers to window dress and the rest.
The next question with respect to misconception that we saw during the implementation phase, and indeed we are still seeing those. So you will recall that some persons say if you register for tax, they will debit your accounts and the like. Now, I want to move to Ogun State to see how they've been able to address those misconceptions. So from your practical experience, how have you been able to address some of the misconceptions that are all over online?
Well, I think, like I said, it's all a matter of enlightenment programs and, well, some done from the center through the General Revenue Board and NRS in terms of making people to understand the fact that the money that goes into your account, nobody is going to debit money in your account. I mean, the process is, it is a question of you registering as required. Now, what the emphasis is just to let people know there is more visibility to what you are doing now, and that the taxman does not have the right to tax the money in your account. There is a process. However, when all those processes have been, exhausted, and then you now go into the process of garnishing and whatever, a lot of people now come to realize that nobody is going to tax any money just like that in your account. But we've done a lot of enlightenment program, even to churches and other small associations, to let them understand the key things involved in this reform. In terms of, if you are running a business, either be it the corporate or the small business company registration, you still need to prepare your accounts. It is the income or excess of revenue over expenditure that you present that you now be taxed as a payee process with the tax table as an individual if you are a registration of business enterprise, and if you are a company, those advantages that are there for you, we've done a lot of sensitization on that. The other thing I would just want to mention is that the last question in terms of, from what the man from the virtual asked, the sensitization program, enlightenment to professionals and whatever. Yes, this has to be a continuous one. One thing that we have done in Ogun State, kudos to the Abuja and district and CITN team. The last month of March, there was a session where, I was invited in and I was able to, take professionals, accountants, tax practitioners through some of the key areas, the salient points in these, new reforms. And I think if you do a lot more of such things, the more the professionals will also be able to ask more questions, get engaged. More importantly, you read. Because the popular balance is, if you want to keep something away from the black man, put it in the books. Most of us don't like to read. With the new tax reforms, you have to read. You read, you reflect, because different things there will have different interpretations, and then you do challenge and build with professional colleagues. Don't be shy. We are all in the learning stage. We are all on the journey. Don't think any question is foolish, because the person that you are asking the question might not even know. So you all go back to read. Let us keep on reading. Let us keep on developing ourselves. And I believe we'll all be better for it. I believe that this new tax reforms is going to be a great thing for this nation, and we should all go for it.
So the final question is with respect to the treatment of the 2025 accounts. So the question is it going to be affected under this new reform? And is there any implementation guidelines with respect to that? So I will hand over to Dr. Abubakar to respond to this.
All right, thank you. I know, being a member of the presidential committee, I know there was a debate around that, and there was a regulation that was issued sometime in December last year, that for an account that ends 31st December 2025, the old law applies. That is, the company income taxes applies. But where you have an overlap in the accounting period, assuming your accounting period ends in March 2026 or April 2026, the 2025 Reform Act applies. That is the deliberation in that committee. And I know the committee worked alongside the GRB to come up with a regulation to that effect. And it was publicized sometime, I think, December or January this year. So I want to encourage the person that asked the question to refer to the pages of the dailies that has been published, and also for the GRB to also maybe try to publicize it again for accountants that file their returns to be able to know what law applies. It's a very simple thing. An account that ends 31st December 2025, the old law, which is the Companies Income Tax Act, applies because that income is generated in 2025 under the old law. But where there is an overlap in the period of maybe the accounting period, your accounting period ends in March, I'm just repeating myself, or April or May, you apply the 2026 law. Thank you.
This is spot on, and indeed, this analysis was supported by judicial pronouncement. So I will refer us to the case of AccuGas and the case involving Shell. So in summary, you cannot break an accounting period. It is a continuous period of 12 months. And the recurring period in terms of the determinants with respect to what law will apply is where your accounting year ended. So for the accounting year that ended last year, the old law will apply. And where there is an overlap because of the decision of the court, the accounting period cannot be broken, the new law will apply. Thank you so much. It's been quite a privilege to moderate this. Thanks, everyone.
Overall, the plenary session provided a balanced and insightful conversation on the realities of Nigeria's 2025 tax reforms, highlighting both the early achievements and the challenges that still lie ahead. One of the key points raised by the discussants was that while the reforms are already showing signs of progress, especially through improved digital systems and wider taxpayer registration, more work needs to be done in synthesizing the citizenry. What are the noticeable gains from the Nigeria's 2025 tax reforms? Let's hear from some of the conference delegates.
What are the changes you've seen in the Nigerian tax system with regards to these 4 tax acts?
There are a lot of changes from the personal income tax, which has helped a lot of low income earners to have higher disposable income, meaning that some of the low income earners will be getting more than what they used to have, and they are not even taxed. Then for the company income tax, there's a lot of difference because prior to this time, they pay more. But this time around, there are a lot of exemptions, especially for the small and medium scale industry, where when they have a turnover of 100 million and a fixed asset, that's non-current asset of 250 million, they're exempted from tax. That is a huge difference. In the area of VAT, there is a whole lot of difference, and the exemptions are well appreciated. So the tax reform, for me, I must say, that is a welcomed one. It's a welcome development because it's that the pay as you earn is really pay as you earn. Those earning huge amounts, they'll be paying more. While those that are not earning more, they'll be paying less, or they may not even pay. And the area of the rent relief is even also encouraging. I wish, like Oliver Twist, who always asks for more, I wish they will even increase the rent relief. It will really help Nigerians, and they will appreciate the current government. A lot of taxes have been repealed. Double taxation has been negated. In fact, about 11 to 15 taxes have been repealed. Like for the development levy, they have all comprised them into one levy. So it's not like like we accountants calculating this tax, but this is just a whole lot of tax put into one for a single digit. Is an impact and is welcomed.
The Tax Act is the act that tries to take away the poor from the income tax bracket, and it has created awareness among those paying taxes. Also, it has tried to harmonize various tax laws that we have prior to now into a less than 10 tax laws, which is more easy to understand and more comprehensive. The Tax Act will help government to increase their revenue base, because prior to now, the high net worth individuals are always outside the tax net. But now they've been captured via the tax ID that have been introduced. So those that have after the tax earlier are now captured to the tax net, which has broadened the tax base and the taxpayer, and ultimately to increase revenue growth of federal, state, and at the local level also the revenue base.
What are the changes you've seen in the Nigerian tax system with regards to these 4 tax acts?
Okay, I think there's an increase in digitalization, and then everyone in Nigeria seems to be accepting the digitalization because of the high rate of technology also in Nigeria. On the aspect of individuals, they are gaining a lot. There's a reduced tax rate for individuals, so they will pay less tax, and some will not even pay much again. And then for business owners also, for those that have small businesses, they pay little or no tax at all. And then for those with big business, it depends on the threshold also. So a lot of gains.
There is no doubt that the tax reform has done more good than ever. Considering the fact that the new tax laws, the 4 laws that have just been passed, the Nigerian Tax Act, Nigerian Tax Administration Act, the Nigerian Revenue Service Establishment Act, and of course the Joint Revenue Board Establishment Act. These laws have no doubt changed the entire tax ecosystem, to improve, tax revenue into the coffers of government. As you can see, if you look at FAC, the amount of revenue that's been shared by the 3 tiers of government has almost tripled. Before you'll be talking about 600 billion, 700 billion, but now you'll be talking about more than 2 trillion that is being shared. So that is one of the effects of the tax reform, acts that have just been passed, by the National Assembly and assented to by the federal government, which took effect from January this year.
Are there any noticeable gains from the acts? Are there noticeable gains so far?
Okay, yeah, there are a lot of noticeable gains. Most especially if you look at the reliefs that is being given, to taxpayers. There were a lot of myths and misconceptions that the laws is going to affect people negatively, but that's not true. Most especially if you look at the taxation of individuals, where exemption has been given to people that earn income of not more than 800,000 naira. And there's also a rent relief, which is 20% of the total rent paid to the maximum of 5 million. So some of these are, and if you look at it, the low-income earners have been completely exempted, from paying tax. That's a huge relief, which is a large chunk, of taxpayers. If you also look at the Nigerian Tax Act, the tax exemption, it used to be 25 million of turnover being exempted from paying tax, but now it has been taken to 100 million, so which is a lot of improvement. Though there are a lot of proviso, which is with a total fixed asset value of not more than 250 million. So by the time a company meets this threshold, they are completely exempted from paying tax. And another area is there's what we call economic development incentive, which has reformed the tax incentive completely. The open-ended pioneer status has been reformed and make it more performance-based, whereby before you can join an incentive, in some priority areas, you need to make some investment into, a certain threshold into some priority sectors, whereby you'll be giving, 5% of the total capital outlay as a credit, not just an open-ended of exemption from tax. So there are quite a lot of, benefits, that the new reforms that gives to taxpayers, and that should be commended.
For many participants at the conference, one message stood out clearly: transforming a tax reform blueprint into reality requires not just good policy, but effective implementation, transparency, and continuous stakeholder engagement. Together, we will build the Nigeria we all deserve. Thank you for watching.